All right, so we were playing that soundbite from Sundar Pichai from earlier this month saying that the company plans to maintain its CapEx spending. What are you expecting? A lot has changed in these couple weeks.
If Google says that it's going to pull back AI infrastructure or data center infrastructure spending, I think that's a terrible sign. I think they're going to keep their foot on the gas pedal for one important reason. This is the company that brought the generative AI innovations to market that kicked off this entire moment. And then remember, they were behind. And they are going to do whatever they can to stay in the game and stay ahead if they can. And so them cutting AI infrastructure spending at a time where they've said that their systems are stressed would be a terrible sign. I think they're going to try to stay ahead. I think they're going to keep spending. And we know there's demand. And we know that this AI spend is powering cloud for them. So I think it's very important for their business. And they're going to keep their foot on the gas pedal and keep moving.
All right, speaking of cloud, that's continues to be the growth driver of this company. Estimates have revenues for Google Cloud rising more than $12 billion, a 28% growth rate year over year. What are you expecting? Do you think they can maintain this level of growth or actually meet the estimates, I should say? We've seen a lot of companies pulling back on spending. Do you think that also impacts cloud spending?
Well, look, we're going to see less impact from the tariffs and the anticipation of tariffs in Q1. So everybody who's talking about pausing their build-outs, I don't think that's going to apply to this earnings report. But that said, I do think that they have the ability to keep their foot on the gas pedal on cloud as well. I spoke with Google Cloud CEO Thomas Kurian just a few weeks ago, and AI is a real driver of their business. There are companies, startups in particular, that are coming in, they're seeing the technology, and they're wanting to build with Google. And maybe in the past, they might have said, we'll just do Amazon. They say now that we'll do Amazon and we'll do Google because we know that there's a lot of innovation, especially on the core technology on the company's front. And I think that's going to continue.
All right, so you have a lot of confidence in the cloud business. You don't see a slowdown there. But what about the ad business? So I'm looking at the YouTube estimates, 11% growth year over year. We've previously kind of framed ad spending as perhaps a canary in the coal mine when people are expecting an economic slowdown. That seems to be one of the first areas they cut back. So if this number comes in weaker than expected, what does that say to you?
Yeah, it's bad because Google ad spending should be more resilient than the rest of the ad industry because a lot of Google ad spending is performance related. You put $1 in, you get $1.50 out. Okay, now you put unlimited money because you're going to make unlimited revenue if you're able to use those systems effectively, as opposed to like big brand spend. You'll see some of that on YouTube. But for Google, mostly it's performance related. And if performance advertising comes down, there means that there's going to be a real slowdown in the economy. It's like the second thing that you cut in your ad budgets when you cut brand and you see that's not working. Then you say, OK, what can we cut? Maybe we cut performance. So, again, I think Q1 is probably going to be untouched. Remember, Liberation Day, beginning of Q2, and it was worse than expected in terms of the amount of measures that would come in. But what they say on the call today is going to be very important in terms of where they're looking, because they do have a pulse on the economy. They do know what the brands across the U.S. and worldwide are doing when it comes to spend. And that, of course, is correlated to anticipated economic behavior. So I would watch that very closely.
All right. Alphabet, obviously, huge company. It is big enough unto itself. I want to take this a little bit broader. The numbers and also the guidance and the commentary on the call from Alphabet, what is that a read into? Is it a read into the other hyperscalers? Is it a read into the rest of the tech sector? In your mind, what does it impact?
Yeah, again, I think it's a read into everything because a company like Alphabet, it touches the entire economy. It touches the small businesses that are trying to accelerate their business by using some advertising. It touches the startups that are trying to build infrastructure through cloud and the bigger companies that are looking to Google for things like workplace. So every company in the economy could potentially touch Google. Everybody uses Google. They use Google Drive. They use Gmail. They use Docs. They use Google Sheets, especially if you're in business. So if Google is seeing a drawback there, I would say that's a problem. But I would put it in perspective to say we're about a month into this Liberation Day moment. And every day we hear another thing about maybe there's going to be some negotiation or maybe there'll be some pullbacks. And I think it's still a little too early, even within Q2, to fully assess what's going on. Now, there's definitely going to be a pullback because of all the uncertainty, but we've got 2 months left of the quarter. And I think Google will be a little bit hesitant before bringing in the prophecies of doom. But we'll see.